Welcome to UnEarthed Financial's weekly Market Observer Report. Now, this last week started off extremely well, but unfortunately, it actually turned out to be a little bit of a disappointment for some of the markets. Now, there's quite a few markets that I need to cover, so I'm going to move through them quite quickly so that we get to cover the important parts of each one of them. Looking at the ASX 200 on the weekly chart, you can see that we have here a very interesting reversal off the 4962 level. This is the 50% Fibonacci level that I've been speaking of for quite a number of weeks. We actually did find some resistance coming up to the old October high back in 2009. It fell short of this resistance where I was actually watching and waiting for it to come up to this resistance and reverse. It did reverse at that time, but it didn't come up as close as it has now. It's almost come smack bang on that significant resistance level at a high of 4955. So it's only 7 points off that target, and the market has reversed. Now I'll go into the specific trades as usual on the daily chart and have a chat to you a little bit more about it. Now looking at the FTSE, the English market, it too has also found a bit of a reversal there. It's reversing off a previous high here back in August 2008. So that could force this market further down. Now the Nikkei has actually broken up through its previous high here quite well, but it has, I've just drawn a red line across the chart there as it just resistance at that level, and as you can see there was quite a bit of resistance around that level and the market moving sideways along there. So it will be interesting to see if the market continues to push up there, but then don't forget we do have the Fibonacci level, the 61.8% level at 11,311 there, so that's a key level to be watching for. Interestingly, the S&P 500 did push up through quite well through its 50% Fibonacci level, and was a public holiday for that market yesterday, so it doesn't have a new bar for this week. So there was a slight pullback of last week for that market. Looking at the Australian market on the daily chart, we actually were looking, we got into this market long around this level here, and the market nicely moved up because we had quite a big rally upward here, and the first opportunity we got in here was at this point here in the market, but unfortunately it was also at the same or just a little bit, it was breaking above this double top here with the previous old high get in, except that we had the Fibonacci levels up above here as well. Now quite quickly then on, it was around the Tuesday, the market actually slumped and hit our stop loss, which was actually residing just underneath this level here as it followed the European markets lead as they fell quite significantly. Now then we saw a little bit of sideways action here, and we actually got into this market short. There was a nice reversal on the FTSE market which did sort of show that there would be some downward pressure, but unfortunately this short trade, although it is in our favor at this present time, only just got stopped out by 5 points. Now that is again the nature of trading. Although you may get the direction right, which you'll see on a number of these trades that I'll be speaking of, which got stopped out during the week, I'd like to put my stop losses just beyond previous resistance or support levels, as usually if those points are broken the market will continue to go further. But at times like these it just nicks our stop loss, gets us out of the market, and then continues back into our favor. This would have been a nice trade. As I'm speaking, the overseas markets are actually weakening even further, so that could potentially continue into our favor quite nicely. So again, that's just the nature and the disappointments that you'll have along the way when you're trading. This is the same with the FTSE market. We had a nice strong move up here. We had an opportunity to enter the market just above this point here, which it did. It had a strong move up that next day. It came quite close to our profit target, didn't hit our profit target. Instead, it reversed and closed on its low, giving us one of my favorite dots, which it did. It has reversed and hit our stop loss and getting us out of that position. We are currently in a short trade at the moment, and that is currently trading around break even on that trade. So on that long trade, we had it was around about 130 points, or it was actually 65 points per contract for a loss of that trade there. So it was only relatively small, but still it does amount up when there's a bit of a streak of these losing trades like what we've seen across the markets. As I mentioned before, the S&P 500 had a public holiday yesterday, so it wasn't trading. It's made a little bit of a double top here and come down, weakened below this previous support level here. So likely that we'll see this market continue further weaken a little bit further. Now, oil was another disappointing trade where when we're trying to enter the market, we're trying to do in the safest possible place, which will allow us to get into the market when it proves strength into the direction. This market broke above this further than our band here, our variation band, and it did so. We had our order above here. The market broke above and then closed back below, executing our on stop or our buy stop order to get into the market, and then the market just dumped after that. It's which is a bit of a shame, but again, the nature of trading, it works on probabilities. So our stop loss was $2.75 below the entry of around 83.55. So that with our minimum 2 contract gave us a loss of $5.50.